Hello, friends of Komodo platform, friends of Bitcoin, and friends of crypto markets, crypto price charts, crypto technologies. Yeah, I'm Adriano. It is the 6th of December, and I'm coming back with another video. And this one is focusing on the BTC, the Bitcoin price chart against USD. Now, since the previous video I made, you can take a look at it. Went through a whole bunch of different altcoins. And since then, we've had actually a pop-up in price. The KMD price traded in the 2000s, trading in the 1700s now. And various prices trading in the 2000s right now. Anyway, we had some pop-ups. Yeah, like ICX is back up 2,500 Satoshis. But hey, this is about Bitcoin. So all you Bitcoin lovers and just crypto price chart considerers, here we go. I'm going to share my screen and we're going to look at Bitcoin price chart, mainly to do time analysis, really, and price analysis. Time analysis and price analysis. So as you see, the big, long Bitcoin price chart, just in terms of momentum, we quickly turned it red on the weekly price chart. We closed that week off at the end of the week, really on that dump, and now we're further down. So it looks like, it doesn't necessarily have to go a super long way to clear out. It doesn't have to be a huge negative momentum like this. Could be something more small like that. Now, it does sometimes take time, right? 1, 2, 3, 4, 5, 6 weeks, that sort of thing. So if we're looking between here, we have 1, 2, 3, 4, 5, 6 more, 7 more weeks before the yellow line, 8, 9, 10, 11, 12, blah, 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 blah. Many more weeks until the, like over 20 weeks, 30 weeks until the orange line. And so what are those two lines? That's basically the time analysis. And the yellow line turns out to be an A plus C equals B. And the orange line is an A plus B equals C, which seems like we might be going there. Another option is, and I haven't done it yet, we need to find an A plus, or no, yeah, A plus B plus C equals, well, they're just ratios of each other. So for example, in this case, B is pretty long. So either, C equals 1, B equals 0.618, A equals 0.382, or maybe B equals 1, C equals 0.618, and A equals 0.382. Already we know A is shorter than B, so we can't have one where A is anything higher than B. Anyway, these are two to consider for right now. Where I'm going to separate that though, where C and A and B have a respective correlation. Now, maybe we need one that's going to be 1.618. So that's the case too. But so what we'll do is first check using the fib time extension tool here. This is called fib, trend-based fib time. And so let's imagine that B is equal to 1. And then we'll check what the A is equal to. Does it equal to 38.2? And the reason I say B and A is based in the Elliott wave ideas of impulses having, like, for example, 5 moves up, and then it has 3 moves down. But really, that's not that's really not the big idea. In fact, doesn't always trace as an ABC. The 3 is really just meaning it's a correction, and the 5 is meaning it's an impulsion. And then you have within the 5 move, within the corrections, you can have 5 move impulsions, or you can have within impulsions, you can have 3 move corrections. Yeah, so that's basically the idea. And so the ABCs are part of the corrective moves, and they're either zigzags or flats. Triangles tend to be A, B, C, D, E's. So there's also a potential to be creating some interesting triangle here where the B wave is really the principal wave, the bigger and the taking longer time and all of that. So, okay, let's compare some time before we compare price. Price is going to be related to these 3 lines here. And in your mind, you might already be able to think about what they are. So what's going to come into play also is the Bollinger Band and also the Ichimoku Cloud. So first, let us take off this channel. So we were watching this channel using the candle, and we clearly broke down out of it. So we're deleting you. Bye. Now we need, this whole market structure has changed over a few days, really. If we go to the daily, oh yeah, okay. So this is an extension tool to look for price levels. Interestingly, I want you to remember that the 2618 extension of the entire first move is down at this red line, okay? And so how are we gonna do that here? Let me just do that again. Basically what I'm checking here is trend lines down, because if we start breaking the trend line to the other side, then that's a potential indication of an ending of the move. The other thing is watching, okay, we made a first move down to this region here, then we made a clear second move down. So what I'm doing here is, well, what if we are taking all of this and, you know, stopping here, and then we make another zigzag down. So we made one here, and we make one here, or a 3 move down, correction, 3 move down here. That kind of an idea. But basically you get the sense here that there are significant levels at the red, and then in between this green and purple right there is a significant 1618. So anyway, now this whole move could be done in terms of price levels, and we might have just been intraday trading down here and that's it. However, I don't think so. I think we do have more time to go and therefore more price to go. Yeah. Now, having said that, anything can happen. And I think that's one lesson that I outlined in the previous video, is just that I was trying to be so keen on the price staying within that channel and continuing higher anyhow, anyway, that I didn't really allow for the possibility. But we did draw this box here as potential zone where it might come and touch, and it has clearly done that. So it's not like we didn't have it as a possibility, but it just didn't allow it enough room. So I think being a bit more open and allowing for more room of these potential secondary ideas or tertiary ideas, you know. So anyway, all right, so that's that consideration. I'm going to remove this for now, so we get a bit more picture of the Ichimoku Cloud. I'm also going to remove this. It might come back into play as resistance, but for now, I don't think I want to see you. Okay, let's check out this idea first, where we are having these ratios. This fib tool is good for that. Let's go back to the weekly. It cuts out the noise and brings us a little bit more of an easy time at calculating this. So okay, let's get in there. So this is your BTC price, and firstly, I just want to mark out a time where we have from this down, the bottoming down here to the top. I want to see where is the 1-to-1 for that. Okay, because oftentimes a correction should be at least, you know, in this case, if it's the same degree of correction, it should at least be 61.8% of this move, or a whole unit of time compared to the move up. So, or in the case where it's a downtrending, then, you know, whatever, they're just comparing to each other. So the downtrending, if we would just flip this, and it's the same idea. Okay, you have your move down impulse, and now you have some sort of correction. Okay, yeah, let's play upside down Bitcoin chart land. Now, let's just do that quickly. So we'll take it from here. Start, we're going to call this one on 12th April, the ending on the weekly, and boom. So we can start here as the beginning. So it's anywhere here, we'll start here, same thing. So it's clearly not 38.2% of the time as the correction. Now we are nearing 61.8% of the time as far as the correction. So the problem with this though is that we really haven't, maybe we can argue that this move up in degree has been equalized by this move in degree, fine. But it's hard to say that this move down and this move up in degree are equalized by this move down in degree. They don't get that sense. So it's hard for me to believe that the 61.8 is the amount of time for this corrective degree to take place. Now, if we want to call this area here the top, and this as also the sideways action as part of the beginning of the correction, you can account for that, and that's fair too, in which case, actually, if we count this as the top, oops, undo that. Sorry, folks. Undo that. Move. I want to move this one. No. Let's do it again. Sorry. We're going to start here. We're going to go instead to here, and then we're going to start it from here. And still, though we've passed the 61.8, and the 1-to-1 is around here, 28th Feb week. So I'm actually going to pop that there with a vertical line of the color, and the purple here is 1-to-1. The color will be, yeah, we'll give it the purple color, and it can be move up equals move down. That's what we're going to call it, 1-to-1. Okay, so that's what the purple line is, and we are going to say goodbye to you. So purple line is move up equals move down, 1-to-1. Okay, now yellow line is the A plus C. So let's get back to that ABC idea. So wherever you want to start, I'm basically starting it here. We have the trading top here, and it's the 12th April, seems significant. And we are going to go, you know, anywhere you can call this low here. Let's get in for you. You can call this low here intra-week trading, or this low here area. We'll go with the halfway here just for fun, but it's not, doesn't really matter at this point. We can take closer look, but for the purposes of the idea, there's the B, and now we're finding a C. So if the A and the C are the same time length, look how it looks symmetrical, and the B takes longer, because it's correcting in the direction of against the trend, and so, but it is strong, and so it's a flat type of pattern, it looks like. Okay, that would be this case. That would be A equals C. If the move up equals the move down, it's still pretty symmetrical and pretty decent, and that's pretty awesome. And I could see that too. That brings us to February. So the A plus C equals B, where the C move down is the same length and distance as the A move down, is roughly 22 of January. If we're going to take a longer A move, then you bring it out, and maybe it brings us to 28th of February week, or that end of February. You know, like if we were to take this A plus C equals B, if we were to start it back here, calling this the A, and calling this the B. Oops, there's about 20 bars here. There you go. So it's 14, 20. So then this C would be about 6. Sorry, would be about 6. Okay, so in that case, we would be much less. It would be around the end of December. So sorry about that. I went the other direction. Anyway, that would be if, you know, if we did it that way. That doesn't seem the way to do it. Anyway, we're going to keep the A starting here. So so that would be the A plus C equals B is the yellow line. Then the next option would be some sort of A plus B equals C, where this C wave time takes the same amount as the A and the B combined. And at that point, it's like, that's where I could see something longer and drawn out and more sideways, less down, more sideways, match with the Ichimoku cloud, have some bounces, match with the bottom of the Bollinger Band, and that's where these things come in. So I definitely like that, but that brings us around to the mid year. That's like, and that's around the first half of the year. So that's really the idea. I think that the Ichimoku cloud is going to serve as support. So I don't think going below like 41 or 40 as a close. Well, we could even close inside. It's that red line, and that was that 2618 relationship from the top here. And that is the bottom of the Ichimoku cloud. So I do think that price could play into the Ichimoku cloud. However, on the weekly, what it has going for it is the Bollinger Band. I don't think we're gonna, well, I don't want to say I don't think, but I think what the price is doing is equalizing. So it's coming down towards the Bollinger Band bottom, and then it'll bounce back up and then come back down maybe, or go sideways, whatever. And then we'll be nearing that time, whether it's, you know, A plus C equals B or A plus B equals C or something in between. We could have an opportunity where, you know, maybe the price doesn't have to take that long, and maybe it's only to here, and it's just a lot faster. That's fine. You know, this B wave was stronger. The C wave could come all the way down here. You know, if you're in the 30,000s and you're wicking down here, or even closing down here, or here at like 38 closing, what are these price levels? The price levels is this green one is the 61.8 retracement. The purple one is the 78.6, and the red one is the 88.6 retracement from low here of the B wave to the high of the B wave. See that? Boom. And important, because if this is a flat pattern, then what usually happens generally, Elliott wave theory on the flat pattern, is that the A wave is retraced by the B wave in the Neo wave version, Glenn Neely style, at least 61.8%. That makes it a weak one. But if it's more than 81 to 100%, then if it's between that, then it's a normal flat pattern, a normal B wave. We've actually gotten a bit of a stronger B wave, but we can consider this pretty normal / strong B wave. So then the C wave doesn't have to come back as far down. And so falling somewhere within this cloud is quite optimal and gives us, you know, a really strong retrace you get here at a 78.6, or even if you want to go 8.86. Now, how long it takes, this is the zone. That's a big zone, and it's hard to say, so you got to watch as it comes along. But that's my sense. I think this watching this region here is really key, and seeing how long it takes. Maybe there's choppiness first for a few weeks before coming down. So in that case, yeah, just watch it. I think into the new year, I'm looking at A plus C equals B as really the first option. But maybe A plus B equals C is true too. But yeah, A plus C equals B is first option. And I think anywhere at the 61.8, 78.6, or 88.6 is a good way to retrace the B wave with the C wave. So usually on a zigzag, you know, you would find the A wave, and then you would compare the C wave with the A wave. On some flats, you might compare the C wave with the A wave in price, but usually you compare the C wave with the B wave, by retracing it. So that's what we have here, roughly, okay? And there you have it, the 61.8 and all that. So that's about it. That's all I have to say on the BTC. Just some thoughts going forward. We didn't do this. I just wanted to show you that it doesn't apply. This A wave, sorry, if the B wave is 1, which we said it starts, let's say, around here, and we go here, that's 1. If we come back to the A wave, it's a bit more than 38.2. So you could argue it is, in which case, if we're here, the 61.8 also falls around the 20, there's like the A plus C equals B. So it actually is pretty close. So in that case, that's also quite a good option, and it does play out. You get, you know, B equals 1, A equals around 38.2, and C might equal around 61.8% of the B. That's pretty interesting. But anyway, I like the A plus C equals B. Okay, that's it for now. I thank you very much. We're looking at something like end of January, end of February as some closer timeframes. And then we have the the beginning of June as that third possible time frame. Okay, for now, the price action, lowest is like 34K, and middle is like 37, 38K, and then upper is currently at like 42, 43K. All right, friends, thanks so much for being here. I hope this helped. I'm wishing you all love, peace, and happiness. And until next time, goodbye.